as always, for joining in. Let me now welcome on board Punita Kumar Sinha and find out what she's making of the market and the world right now. Punita, hi, good morning. Great to have you on ET
Good
now.
morning.
Punita, an interesting world we live in, and so much has happened all through 2025. But the one deduction has been that a multi-asset strategy worked best for investors. Do you think one needs to have that same kind of temperament as we step into the new year?
Well, I think 2026 is hopefully going to be better for the Indian markets than 2025 for a number of reasons. I think our growth story is still pretty solid. The valuations, which have been the biggest concern in 2024, leading into 2025, are now much better than they've been. So we are back to the 10-year averages, roughly on our valuations. Not cheap still, but not expensive. And that whole AI trade that has caught investors' attention, particularly the foreign investors, that trade obviously, while the growth story for AI is still strong, the valuations and whether, the debate around whether this AI story in the stock market could reverse. And if it does, then India offers a good hedge and diversification to that trade reversal. So I think some of that will all play out in 2026, and that I think foreign investors would also start relooking at India in 2026.
And Punita, hi, morning. This is Harsh. So, what would those sectors be that FIs would look at? Because traditionally, they've always looked at financials, they've always looked at IT. Both of those, to a certain extent, have underperformed. Of course, near-term IT has done very well. How would you position yourself?
Well, I mean, financials have had a very good year in 2025, but financials is the backbone of the Indian economy, and the financials is a very vast sector. You have asset managers, you have brokers, you have banks, you have NBFCs, you have fintechs. So there's a lot of choice, and even within that, there's the private sector, the PSUs, the housing finance companies. So I think there is still, stock selection opportunities within the financial sector space, and I think that's a space one should still be invested in. IT, the valuations are, of course, more attractive now, given the recent, the 2026 underperformance, particularly again going back to that AI trade where Indian IT companies were seen as losers because they were. I mean, the fear is obviously that their business is going to get replaced to some extent by AI. I think so. Valuations in that space are reasonable, although the long-term growth story, I think companies have to really focus on being more innovative, and it'll again not be a whole sector-wide, success story. There'll be some winners and losers, and those who innovate more would probably do better. I think real estate has been a laggard this year, and given where interest rates are and how actually on the ground the real estate prices are still going up, but the stock prices are not going up of real estate stocks. I think that's a sector again that could be attractive. And then back to capex. I mean, I think we need to India needs to keep adding capacity and capital goods, and some of these small and mid cap stocks that have had a big correction this year could also on simply on valuations start looking up in 2026. So I think in 2026 India should be doing far better relatively than in 2025.
Interesting you say that. So, Punita, just taking a leaf from all that you talked about, what sectors and themes should one look at? And do you think 2026 is going to be more about bottom-up plays or where you do have enough growth visibility?
No, as I just mentioned, I mean, I think financials, selective tech, real estate, capital goods, anything again infra related, or it will be, of course, I think stock selection will obviously be key, but in the mid and small cap sector, there could be just general rally across mid and small caps as well. But one lid or cap to the markets is, of course, the IPOs. There's so many IPOs that we've had in 2025, and then maybe if the market recovers, there'll be many more that will come, and that always provides a cap on the returns. And so that's something to watch out for. But the macroeconomic variables in India are all looking decent, and I hope the trade deal at some point is again helpful for the exporters, which have been laggards. So I mean, again, that is a political issue, and we don't know when it'll get fully sorted out. But if and when it does, that's a space that has been a significant underperformer and could benefit.
And Punita, I don't hear consumption.
Well, I mean, consumption is played through some of the sectors I mentioned, like financials and
Sure,
real estate are
sure.
also indirectly consumption plays. And consumption has to be bottom up. I think it's a very competitive space. And while there's a lot of growth, I think there are always winners and losers, and those who gain market share and margins. And I think so that always is a stock selection, you know, bargain hunting kind of space.
Okay, and and I want to stick a little bit to the consumption theme. Auto has seen a decent rally. Uh, would that, and especially on the two-wheeler side, on the more uh, on the rural play with regard to auto, the likes of a Maruti and the like, which are more on the budget side of things, do you believe that those could well be poised for a continued uptick in terms of return performance?
I don't want to get specific into stocks,
Sure.
but um, but I would say autos is a story on consumption as well. You're right, and therefore, I mean, and the space and the sector has done decently relative to other sectors this year. Um, Rural demand has, I think, been seeing some recovery as well, and so two-wheelers could be a decent space to be in.
Okay. All right. Thank you so much for coming in and speaking with us, Punita. It's been a pleasure speaking.